Hi guys, welcome back to the channel. Uh, just looking at what's happening, refining the strategy. What I've noticed, as I said, since the last video that was done, I've noticed that I've always done well on breakouts, and so what I'm going to try and do is all my trades are going to be done based on breakouts, right? How do you know that you're going to have a breakout? You know that you're going to have a breakout when the MACD line is moving almost horizontally. So once it's moving almost horizontally in the middle, you're definitely going to have a breakout. So the breakout, the breakout can happen on any chart. So you have to check the charts, right, to see what is happening, and then you'll basically get a pinch of the breakout. Right now I'm currently in a trade. Last night I actually caught the breakout right here, right? Made a little over 400 pips, right? So I made a little over 400 pips. Alright, so as I've noticed, the breakouts are the ones that are constant. I've always made consistent, chosen the right direction most of the time because I'm waiting on it to break out in the direction it's supposed to go, and I've actually done well. Another thing that you should be aware of, you should be always aware of what's happening. You do your checks in the morning and find out what's happening on the calendar for that day or for the week as well, just to have an idea. For Friday, nothing much is happening today, right? But we had a lot of stuff happening early in the week where the FOMC. We had, I think, the jobless report. Well, a couple of things that happened, right? So, that could predicate movement in the market, right? Also, you want to be aware of the market times, what is happening. So right here, we can see that for the market, pretty much it's very, very, the volume is high and it's very liquid, meaning it's a good time to trade when it overlaps. The London bank hours are good times to trade, but generally when they overlap, it's a good time to trade. It can get very expensive, in terms of when you're trading. If you enter, for example, right here, it can be very expensive, cost a lot. So you have to really, just watch the market, be aware what you're doing. Based on my time, generally like 3 o'clock, those are good hours to trade right down into 5, right? And then you wait, there's some noise here generally, then you look what is happening and you might have a trading opportunity here. All right, so we know the market will pretty much close about in an hour. So this trade that I'm in, basically, the build-up wasn't heavy, meaning the compression wasn't heavy. You saw the compression when you look at the 15-minute. When you looked at the 15-minute, when you looked at the 15-minute, when you look at the 15-minute window, then you were able to see the compression. If you look here at the ADX, was tightly woven, right? So you're gonna have a little bit of trading opportunity. We had a heavy compression here before, so let me try and go back. That would have been earlier this period. So if you look there, see if I can get this thing quickly. Where do I find this thing again now? Alright, so basically right now I'm pretty much just going to try and go in and out of the market, not gonna stay long this time around. The trade where I did over 400 pips, I pretty much right here, I pretty much I was in there for maybe about 2-3 hours. Alright, so the longer the compression period, then the bigger the move. Alright, so this compression period was earlier in the day, right up until last night I actually saw it. Right, it was very tight. So the candlesticks are compressed, Bollinger Bands are compressed, the MACD line is moving horizontal, ADX line is compressed, right? So you know that you're gonna have some movement. Alright, this is a 5-minute chart. Alright, so when we look at the 15-minute chart, there was a little bit of compression right here. So again, I'm just going to be in and out of the market. Alright, so what we use to indicate that it's time to trade, the candlestick is always arguably the fastest indicator of what is happening in the market. So the actual candlestick is the fastest thing to tell you what's happening in the market. However, we use the alligator indicator and we use the ADX indicator now to indicate what is happening, filter out the noise, tell you when to go in, right? So right here, and generally what I do at times, sometimes I'll come out into the 1 hour just to see what is happening as well. So I'll come out to the 1 hour and just to see, helps you get rid of the noise, right? And so you know that it's time to trade. All right, so the 1 hour told you pretty much right here, it's time to trade, right? But just to fine tune things, I generally start from the 5 minutes window. All right, pretty much this is at the end of the trade now, so you don't want to stay in this thing too long. You're at the end of the trade. There's nothing much you're gonna get. All right, but I figure it's a possibility that I can get something out of it. So not much. It's really, you're not gaining much by entering the trade here. So there's a higher probability of you gaining something the earlier you enter the breakout. All right, the later you enter the breakout, the most likely that you're gonna mess up yourself. All right. But we had analyzed the market before, and as I said before, we looked at the fact that the candlestick is pretty much bouncing off resistance lines, right? So again, anything can happen. The market is like driving a car. It's really, you try not to predict with too much certainty. Remember, things are happening in the world as well, so that affects the market. So while it might be expected for something to happen, something crazy can be happening and cause everything to go haywire, right? But pretty much we expect it to go back down, and we expect it to go back down and eventually bounce off this point of resistance. You would argue why not some person's trading style, they could just take it up here and depending on how much money I have, and wait until it comes down here, and that's good for them, right? But it's dependent on how much money you're working with and also your trading style. For me, I'm trading as if, listen, I only have $1,000. I'm starting with $1,000, and that's what I have, right? So um, that's it. So we are going to just look back at this thing, and we're going to see if we just try to get out, get something, get out. All right. So there's nothing to stay in long at. We have done the heavy lifting already. No need to be losing the market, chopping up, and you're losing money. Right? So as soon as it goes in my favor again, I'm out. All right. So let's see what happens. But yeah, that's pretty much it. Truly, as I get, there's really nothing for you to gain to enter the trade this late. Nothing at all. Reality is, probably should have packed up and left it, and we see that that's it. But there's an opportunity to get a little bit more, but you should never be greedy. Right? So but I've learned over time there's nothing much to get in the trade at this point. Right? But we see where it's tightening up right here, and we're just looking for a mini breakout, a minor breakout, and then we're pretty much out of this thing. All right. So I said early in the morning to last night was pretty profitable. 400 pips. The aim is to make 200 pips per day. For every pip, I make $20. So if you make 200 pips, that would be $400. Minimum 100 pips per day. So if you make 100 pips, that's $200, right? So at the minimum pip per day, that's $200 per day. That's 100 pips per day, that is. It's $1,000 per week. That's $4,000 per week. Per month. $48,000 for the year. That can work for me, right? And so, yeah. So that is how you're looking at that's how the calculation is. So the thing is to do it consistently and to win at a high percentage of the time that you're in, and also keep your money, all right? So that's the key thing. It's a lot. I've made, number of times, you have a good trade, you make some good pips, 400 pips, 500 pips, and you throw it all away. The market starts getting choppy. You're not entering when you're supposed to enter. You're not waiting for breakouts. You're just trying to be greedy, and no. So the thing is, what I'm trying to train myself is, listen, wait for the breakout, go in for the opportunity. Once it's there, get your money, then you're out. Okay? So that's what we're looking at. As I said before, you have to be pretty much aware of what's happening in the calendar. All right? So today, there's nothing much happening. All right? You also have to be aware of the trading hours. All right? So the more overlapping, when you have two banks, that means liquidity is high. You have the New York and the London banks together, banking times together, trading activity is going to be high, right? If you look here, the volume chart here confirms it. So trading activity would have been high at about 9 o'clock, thereabouts. Again, there's a spike at about 2, 3 o'clock. All right, winds down. So it's probably going to come down to nil. So whatever trade I'm in currently, trying to get in, trying to get out. That's how I look at it. All right? And so these are the things that you have to be aware of before you go in the market. I'm a news person. I'll follow the news, but the news, I'm not going to use the news to predict what's happening in the market. I'm going to look at the market to see what is happening in the market, right? But the news is important as well. But I'm not going to use that to predict the market. I'm not that I'm not that type of person, and everybody's different. So it's like driving a car. You're looking at the traffic, right? Going around a roundabout, and person coming from the minor road on the left or wherever you drive, but coming off the minor road to into the roundabout should give you the right of way. Hey, the person might just drive out in front of it, right? So pretty much that's how I look at it. Watching the market, there are some standard rules that I'm working with, but otherwise I'm watching the market because sometimes the standard rules, it goes out the window, right? But the rules for trading though, that is what you have to pin down and never go away from that. If you find a strategy that will work a high percentage of the time, then that's good. And that's the key thing right here, right? Can we find a strategy that works a high percentage of the time and you keep your money? So number one, you have to find the strategy that works a high percentage of time, right? You have to know when to enter, when to exit. That's important because you can see the trade. If you look at our previous videos, you can say, listen, based on your analysis, you know there's a high probability that the market is gonna go this way. So you might have it right. But when to enter, that's the key thing, right? And so it is that this is what we have to look at, right? So this particular trade, I'm just gonna be in and out. As I said, really and truly, it's not a trade that you really should be getting in because you have already done the hard work. And when you are trading at the end of a trade, show you what I mean. So this is the best time to get in a trade, which would have been about right here. So you know you have it condensed a little, and then the breakout happened, right? So that's the best time to get in the trade. The later it takes for you to go into the trade, it's a high probability that, listen, you're gonna be doing crap, right? So if we look right here, best time to get into this trade would have been about right here. Get into the trade, get out right there, right? If you try getting into the trade here, unless depending on how much money you have to work with, but it can be choppy, right? Again, the best time to get in the trade right here. So really and truly, for even this trade that I went into, not a good time to go. Once you're out, hold until you know there's a clear indication that, listen, it's time to go back. So right here, the 1 hour chart I find is very instrumental, right? And it means that even if the chart goes against you, you can say, all right, listen, I can hold a little bit with pretty much high confidence that it's gonna go back in your favor, right? So this is the type of thing you want to do, right? So you want to hold until, as I said, when you have the high compression, then you enter, right? Look at the chart, then you enter. Come out and hold and wait for another high compression. Does it make sense when you're trying to enter the game or the trade and most of the trade is already done and the market becomes choppy and it's just messy? So right here, as you can see, I entered this trade late. Choppy. Doesn't make any sense. It's pretty much if it comes back and resets itself and then gets ready for another breakout, that's the time to trade, right? Look again, it's almost pretty much near to the end of where the market hours for the London market and the New York market interlocks. So again, money is gonna get tight, volumes are going down, liquidity is going down pretty much. Not a good trading time, right? So all of these things you have to be aware of. You have to train yourself. All right, so you can see there's not much for me to gain right here. I've already done the hard work. When there would be a lot of liquidity in the market, there's a breakout, and so it's not a good time to go in. All right, So the whereas up here, I know for a fact, all right, even if the market goes, I can hold on it. Right here, you don't know what's gonna happen. I think the whole thing could retrace itself and come right up, right? You don't with $1,000, you don't have that type of money to play with, right? So you want to be making money in the black early. You don't want to, be waiting and it's anything can happen, right? So, and that is what I'm trying to train myself to do. So don't be greedy. You get your money, keep your money, and wait until the right time to go in. And once the right time to go in, you go in there, as I identified, come out, wait for that opportunity to repeat itself. Because one thing I've noticed, no matter what is happening, there will always be an opportunity to make money in the market. That opportunity will always come back again, no matter what is happening. It will come back. And so if you are patient, then trust me, you will make money. So, and keep your money and keep compounding and make money. So we'll update you in terms of what is happening with this, but peace out until the next time. Thanks.